about an incremental revenue problem from capital budgeting. Now, what is this incremental revenue? When a particular business already has a business and they want to set up a new business, so when they have to compare it, what we do is we find the cash flow from the existing business as well as we find the cash flow from the new business, and then we find the incremental, how much extra they are going to get, what is extra cash flows. So that is called as incremental revenue. So I've given you a problem and have underlined you all the important points over there in the question. So incremental revenue, an MNC is faced with the two options. One is export, another one is manufacturing. Now in the case of export, you see they are exporting 2 lakh units and at $80 per unit. Next is a variable cost per unit is how much? It is $45. Now second option is installing a manufacturing unit and they will produce how much? It is 5 lakh units. So in this case it is 5 lakh units and exporting is how much? It is 2 lakh units. So they are installing in the same country, that is country X, it is destination for export. So what do you mean by that? It is the same country. Next is setting up of a manufacturing unit will have a cash outlay of how much? 50 million. Next is 5 years and the salvage value is how much? $10 million. Straight line method depreciation, working capital is $5 million. Variable cost is how much? Per $20. Fixed cost is 2 million. Then selling price is 70 per unit, then tax is 40%, cost of capital is 15%. Now we are supposed to advise the company. So while starting, we'll start with the first is the new business, then we will go for the export. Now here intention is finding the cash flow. So both the method, both the projects, that is new business as well as the existing business cash flows we are supposed to find. So new business, we know how to find the revenue, that is units into selling price. Then variable cost also units into variable cost is 20. Next minus the fixed cost, it is given directly, then you will be getting earnings before depreciation and tax. So first we have to supposed to depreciate, that is depreciation. 50 minus 10 is the salvage value divided by 4 life, and EBT you get, minus from that you deduct the tax. 40% is a tax rate, so you get earnings after tax. Finally add back the depreciation because we need the original cash flow or the real cash flow. So get 1 crore 70 lakhs. Next you see the export revenue, how much? Here it is 2 lakh units, 80. Next one is variable cost, there is no depreciation or fixed cost, so directly we are deducting the tax. So you get the cash flow, here it is 42 lakhs. So we compare it here. Incremental cash flow, how much we get is the difference. So from the new business we are getting 1 crore 70 lakhs, whereas from the existing business we are getting 42 lakhs. So we get the incremental cash flow of 1 crore 28 lakhs. Next let us find the present value of the cash flows. So here 1 to 5 year and 5th year I have taken it separately. Now 1 to 5 year it is the same cash flows, 1 crore 28 lakhs. But for the 5th year we are taking it separately. Why? Because we have working capital and salvage value, which I am not taking it in first 1 to 5 year. Why? Because for working capital and salvage we need present value of cash flows, whereas for 1 to 5 year cash flows are same all the year, so we are taking annuity. So present values are different here, therefore we are taking it separately. So you go with that. So you get the cash flow we have to multiply it with the PV factor at 15% is a PV factor. So 1 to 5 year we are supposed to check the annuity. So this is how we are going to do. So you multiply the present value factor. So when you multiply and add both, you get 5 crore 3,60,600. So what is the formula for NPV? Present value of cash inflow minus cash outflow. So inflow is 5 crore 3,60,600, whereas outflow is 5 crore. So you take the difference, you get positive NPV. So finally you need to advise the company and say that since NPV is positive, the company can go for investment.